All right. Yesterday was a really good day for trading. What do we have here? Let's take a look at the recap. Let's start somewhere around 6 o'clock. We see a lot of beautiful action here. Okay. All right. What do we have? We have a few first percentage fair value gaps. Definitely some scalping opportunities. Retest off of that if you're awake at 6 o'clock. Interesting. Goes for a little bit. Looking to take profit somewhere around here. Oh, there's a take profit entry exit right there. I like that. And then it falls. Okay. Yeah, you come back down. Definitely a good scalping opportunity. Also, plus optimal trade entry area. Oh, it's a bearish one, so ignore that. Alright, let's see. What do we have? Yeah. So we're making short-term highs. We're definitely looking bearish despite the bullish signs, character and such. Delivery still looking bearish. Okay. Alright, now we're starting to okay. Character is bullish. Structure bullish rather. Okay. Alright. Not a bad idea to be in a trade at this point. Bullish. Okay, actually a very bad idea for that strategy. Have to get out of that. So maybe a scalp real quick. Boom, boom. Okay, boom. Yeah, I don't like that. For a scalp, I'd use that. But if it's not working with what the expectation, we wouldn't take that trade. No trade here. You know what? Let's turn this off for now because it's not what we're looking at until 9:30 because we want to see how that works. All right, there we go. I'll need to play around with my settings because I deleted some stuff and I need to resave it, but we'll see. Take that all the way down to opening range gap settlement. Honestly, I probably wouldn't take these trades unless I got in maybe here. 567. 9-point stop. It's not unreasonable. Come down, take the liquidity there. Turning around, I like it. This is a reasonable 520. 12-point stop, not bad. Take that to OTE and then monitor it, especially this breakaway gap. Monitor it around the breakaway gap. If it doesn't eclipse, okay, so it inverts it, so you have a pretty decent trade, but then it turns bearish around the optimal trade entry, the bearish trade entry, which would have been a good trade to the downside, but I don't know how I'd feel about that. I do see the structure in the lower highs. 565. 12-point stop. Not a horrible trade. But that would concern me, and I might get taken out there. Actually, no, because if I had it at the long-term high, I wouldn't get taken out. It does go, but it is concerning. It is testing the patience. I'll have to read more into intermediate term highs to see, because technically they should be respected, but maybe there's some reason to suggest that if that's the best you can do, maybe there are scaling opportunities. This would definitely not look like a scaling opportunity to me. I mean, shorter short-term high, I might think about it, but I'd also, maybe not a good idea. Coming this close to the long-term high would have me clutching my pearls. Let's see, but this would be a pretty decent trade from here to there. It collapses. 9 o'clock. Let's get I'm pretty sure we have opening range gap. At this point, it's down. Okay, let's see what happens because I do recall having a different bias. But let's see what happens at this point. That's because we plummet. So that would have probably done for the day at that point, realistically. Yeah, you take it all the way down to, and I have too many lines on my chart. That's why. Close to New York PM low from the previous day, but I don't need that on my chart. How do I turn that off? I mean, at least not at this point. Something might trade in the future, but right now we're not trading New York PM or AM though, so let's take those off. Let's see. What else do we not need? Since we're here, trading notes. Okay. All right. What else do we have? Oh, so then we're looking at, oh, this is already 930. So yes, we did have a bullish gap. The gap was minuscule. We also had a jagged bullish bias, although it said structure was bearish. Everything, we had a higher time frame. Oh gosh, that's the other problem. The 240 and the 60 were bullish. I think if I can redo the to the 5 and the 15, we said the swing length was 7. Yeah, the swing length was supposed to be 7. And we said that we wanted to do this at 5. So this should be 7 as well. And this should have been 15, so it should stay 10. Okay. So those were bearish. So that actually hurts. So maybe I need another one. With a higher time frame than this. Maybe I need a third one. 5, 10, 15, and an hour, I guess. I'll add a third one to this because this clearly turned. These are both, no, yes. The hour is bullish. Maybe the hour is sufficient then. Because if the hour is bullish, and the 5 is bearish, maybe I don't care about the bearish. Okay. So that way. We're below the. So we were below. Oh, right. There was a superimposed first presented fair value gap from 2 of the prior sessions. I think this was midnight and 3 a.m. So this was a very strong area. I did expect it to come down here to test this, but I said that I should have been able to see that it came down to this prior low, this intermediate low, and did not, and it missed it. It only grabbed the liquidity from this short-term low, failing to reach all the way down here. I thought it would come back down, but because it printed inside, so this is the 930 candle immediately rejected the gap, which is fine. Actually, that's not even true. The 930 candle tried to print into the gap and rejected, which is very interesting. That the area, no, it's not interesting at all. That's not interesting at all. That's kind of how that works. Okay, fine. Came deep. Actually, it came pretty deep into the gap. It rejected the 50%, which concerned me. I was thinking bearish. I'm starting to think bearish, but then it came down. I wish I could determine a barrier. So I guess my barrier on the south side would be the liquidity that's available. So it grabbed the liquidity that was available, the first liquidity that was available, not the secondary liquidity. Well, I guess I should call this primary and super primary. All right. So this is a, let's call this a tertiary level liquidity. It didn't come down for more, and it shot up, which tells me that I am bullish at this point. Once I could print, what's my stop? That's the problem. Okay. So that means that I have to go back to what I was doing in terms of trying to minimize my stop. I should try to get in as soon as here if I'm thinking this. No. I'll have to work on this. There's something I have to figure out what this stop loss looks like. Because here would be the ideal entry, but how do I verify that it won't come back down after rejecting the gap again? I'll have to work on that. Anyway, print inside the box, which tells me I should be in. After printing inside the box, create a first presented fair value gap, which is absolutely ideal. Can't even come back down to test the first presented fair value gap. Create a second fair value gap on top of the, well, just above the first presented fair value gap. And we run away, really. So many points to be had here. Shy of the stacked first presented fair value gaps. Start to curl, we print right through them like a hot knife through butter. Keep going. I would have wanted to pay attention around this area anyway. I actually did take this trade. I got in after this first presented fair value, after these two first presented fair value gaps. I got in some around here after the 786 even, and I got stopped out because I moved my stop into profit, and I think it was one of these wicks, probably this wick here. It just took me out, but that's okay. Lessons learned. And then it turns around right after eclipsing the stacked first presented fair value gaps. We're looking bearish. I don't really see a strong entry opportunity here. It does come back down. It attempts to reach the box, but it fails. It actually only tests this first presented fair value gap and then wicks to the other one. This is definitely a good entry here, at least to monitor it to the stacked area of first presented fair value gaps. Comes back down, it'll take you out. If you have to keep your stop and structure, it won't take you out actually. And then you're in a trade, maybe a scale-in opportunity here when you test this first presented fair value gap and then shoot up to the stacked first presented fair value gaps, and then you make a lower high. I would like to be in here, but I don't have any strong criteria. Plus, I'm above the EMAs, and I wouldn't bother trying that yet. So I'm still thinking bullish, honestly, because we didn't even make it down here. The lows were higher. So let's see what we have. And we take off. We make higher highs. So this wouldn't even have been a good trade unless you got out around this area, which is respectable. It's a decent scalp. Decent scalp. Like I said, we're still supposed to be thinking bullish at this point. Higher lows, even higher lows. So maybe even a scale-in opportunity here off the rejection of the stacked fair value gaps, first presented fair value gaps. Higher all-time highs, and then we come down. We go right back up. Higher highs, higher all-time highs. And it's almost noon. Create some breakaway gaps, we reject them, waffle around, and think we make all-time highs again. And we make all-time highs again. This is a great trade to be in, all the way up. And then we start coming down a little bit. I would look for the short if I'm not in the long still, following it in structure. Still made a really good day if you're in it, and you get taken out. And you start looking for the short. It created a high intermediate high close to the low time high, which indicates to me that either we're going to come back up here to touch that all-time high again, or we're looking to short. What do? We create a much lower intermediate term high. This is well into the afternoon at this point. a higher intermediate term high, and then we plummet. Okay, so when we create a higher intermediate term high, the body, yeah, it's completely higher. There's just no way around that. That's just a liquidity grab to the downside. Bounce off the stacked first presented fair value gaps, create a lower intermediate term high, a higher intermediate term high. We're absolutely bullish. And then a much higher intermediate term high and lower intermediate term high. A much lower intermediate term high. I'm definitely thinking bearish. Except we create a higher intermediate term high and we create another higher intermediate term high, and the day is basically done at this point. You're not trading here. If you were in a trade, fine, but we just straddled the 130 first presented fair value gap, and although there are scalping opportunities, maybe if you look at this from the EMA perspective, maybe there's something here to do. Let's see. You could maybe squeeze a little bit here. You could definitely squeeze something out here at 2 o'clock. Boom. You take this. Boom. 695. Cool. 50 points there. See if you can get something else. Maybe you can squeeze something out there. Might be a little difficult. I wouldn't recommend it. But maybe. Let's see. Probably squeeze something out here. Let's say. So you get in here-ish. 693. Oh yeah, you can get a cool 40 points there. Let's see. And that might be it. Yep, that's probably it. Maybe you're getting 1 or 2 points here or there, but you're not really getting anything juicy. And the day is done. And that is Thursday, May 14th, day recap. Thank you very much.